This is a survey that we've been conducting for a number of years, and we are huge mortgage originators in the UK. We have a £50 billion plus mortgage business, and it was clear to us that there was a lot going on behind the scenes with mum and dad. So we therefore have a survey every year of about 1,000 families right across the UK to see what's happening. And it revealed this amazing evidence that the bank of mum and dad was creeping up into being a really significant player in the mortgage market here in the UK.
Are you surprised at some of the regional discrepancies? For example, the southwest of England, £30,000 on average from mum and dad.
No, I think there will be regional differences. I think the similarity is perhaps the most common theme, that actually right across the UK, Bank of Mum and Dad is typically helping to the tune of £20,000 to £30,000 to help children really with their deposit on their house.
You think this is unequivocally a bad thing?
Well, it's a good thing in one sense that it helps people get onto the housing ladder. And it's a good thing that it helps parents help their children, which is a good thing to do. It's a product of 30 years of policy failure in the housing market, and that's the problem is. And we haven't really got any concrete solutions at the moment, and therefore we need to resolve the housing supply problem. And instead of cheering when house prices, inflation is 5% or 7% or 10%, we should recognise that that's not a good thing for the economy. And we're all beginning to recognise that actually it's terrible for the younger generations, both if they're renting or if they're buying.
So a decline in house prices would be a good thing then?
Well, a steadying of the house price increase so that I don't think declining, deflation is rarely a good thing, and therefore very modest price increases would be much more in line with wages and the inflation of other products. So it's seen as a normal product, rather than this obsession that we've all had for the last 30 years about talking about how much house prices have gone up. And my generation got free housing, free education and great pension schemes. Sadly, this generation is not getting any of the above, and therefore we've had these windfall gains. We should be sharing them with the younger people. That's the consequence. It's an unintended consequence of the failure of housing policy.
So you're clearly very concerned about intergenerational inequality. Should the government dispense with the triple lock on state pensions then?
Well, I think that's an issue that they need to really address, because that's helped bring a lot of pensioners out of poverty, and I think that's one of the successes in recent years. But there's a desperate intergenerational unfairness. But in both sides of the housing market, I think the housing's too expensive for the young people, and there isn't sufficient supply of relevant and useful housing for elder people in Britain. Only 1% of all housing, new build housing in the UK, is built especially for elderly people or retiring people. So we need to change both ends of the housing market.
But this isn't going to change overnight, even with you and others investing as much as you are.
No, it's a long-term strategy, and we've always had short-term solutions from the government, and those 30 years of short-term solutions have resulted in a terrible consequence of that. We've massively underbuilt now for 30 years, and house prices are way too high, and we've got to have an adjustment mechanism. Otherwise, the Bank of Mum and Dad will become an even bigger bank next year.